Hello and welcome to Crypto TV. I am your news host Parvati Nirban and let's get into the world of crypto with English News Bulletin. Let's have a look at the headlines first. Bitcoin falls to near $21,000 as cryptocurrencies continue to plummet. Binance resumes Bitcoin withdrawals after pause. Crypto lenders BlockFi cuts staff by 20%. Bitcoin slides wrecks balance sheets of several prominent holders. Celsius withdrawal freeze affected German Fintech Nuri's Bitcoin interest product. DeFi protocols and CEXs wrecked by the crypto crash. Goldman Sachs begins trading ETH-Linked derivatives. The rout in cryptocurrencies deepened on Tuesday amid mounting macroeconomic uncertainty and after decentralized finance platform Celsius froze withdrawals and transfers for customers and also halted all trading activities. Bitcoin plunged to near $21,000 in intraday trades, its lowest level since December 2020. The total market capitalization of the cryptocurrency market has now shrunk to less than $1 trillion, the lowest level in 17 months. Unrelenting inflationary pressures and reports of insolvency for a few crypto projects has spooked investors with bets on the Federal Reserve's hiking its benchmark rate by 75 basis points in June, gaining momentum. Last week, data showed that US inflation unexpectedly climbed to a fresh four-decade high, reviving fears of prolonged aggressive Fed rate hikes which could push the US economy into a recession. Investors were looking forward to a pause in the spate of rate hikes sometime later this year, amid expectation of an easing in inflation. The S&P 500 dropped 3.9% to end at 3,749.81 on Monday, setting the index more than 20% below its recent record high from January, considered to be an indicator of a bear market. The Nasdaq Composite fell 4.7% at close to its lowest level since September 2020. The extreme market conditions has forced crypto lending platform Celsius to pause withdrawals and transfers, while Tron, another algorithmic stablecoin, was facing difficulty in maintaining its peg. Bitcoin was recently trading around $21,100, down nearly 19% in the past 24 hours. Ether, the second biggest cryptocurrency by market capitalization, was trading around $1,159, down over 14% in a similar time span. Other major altcoins too traded with similar gases. Binance, the world's largest crypto exchange by trading volume, resumed withdrawals of Bitcoin after a pause early Monday. The problem was due to a stuck transaction causing a backlog, according to a tweet from CEO Changpeng Zhao. The Binance chief said the funds are referring to Secure Asset Fund for Users, an emergency insurance fund that his exchange established 4 years ago. He further explained that the issue was only impacting the Bitcoin network. The Binance withdrawal pause comes close on the heels of crypto lending network Celsius announcing Sunday night that it was suspending withdrawals, which caused a further cascade lower in crypto prices, with Bitcoin currently trading below $23,000. Crypto lending firm BlockFi said Monday that it was laying off roughly 20% of its staff. Celsius rival BlockFi joins US cryptocurrency exchange Gemini, Coinbase and Crypto.com in the digital asset space to cut workforce amid a brutal bear market. Zach Prince, co-founder of BlockFi, took to Twitter to express his disappointment about layoffs and assuage his clients that all products and services continue to operate normally. El Salvador, MicroStrategy, Tesla, and Block Inc. saw losses on their Bitcoin holdings, piling higher following crypto market turmoil on June 13th. At last count, El Salvador owned 2,301 BTC with an average purchase price of $45,171.86. The Central American country's investment is fast approaching an unrealized loss of up to 50%. MicroStrategy currently owns 129,218 BTC, held at an unrealized loss of 18%, although Saylor maintains his company has no need to consider selling. Meanwhile, Elon Musk's Tesla owns approximately 42,000 BTC with a slightly higher average purchase price of $31,620. This leaves the auto company's investment down a little over 20% at the time of writing. Finally, Jack Dorsey's block, formerly known as Square, which has the lowest average purchase price at $27,407, holds 8,027 BTC for an unrealized loss of just over 8%. Bitcoin's price has plummeted to levels not seen December 2020, with the cryptocurrency changing hands for $22,333. Crypto lending platform Celsius withdrawal freeze has affected a Bitcoin interest product offered by German Fintech firm Nuri. Nuri, formerly known as Bitwala, launched the product in May 2021, offering up to 3% interest on Bitcoin holdings. Nuri partners with Celsius to offer the accounts to its users. However, Nuri also halted withdrawals and fresh investment in the product after Celsius' move. Nuri stated that while withdrawals and investment for the Bitcoin interest account are temporarily paused, all their other banking and investing features are still active and ready to be explored. Nuri recently moved to shrink its staff, laying off 20% of its employees at the end of May, joining the ranks of other major crypto firms that have undertaken similar moves. Heavy cryptocurrency sell-off in the market has exacerbated liquidity crunch for projects and entities alike, with utilization levels plummeting. On popular decentralized finance lending protocol Aave, utilization rates have fallen across nearly all stablecoin borrowings. The ratio of borrowed to deposit funds is known as the utilization rate. Since borrowers are required to post digital asset collateral before taking out a loan on Aave, users are likely withdrawing in a group in light of sell-off to prevent liquidation. Data indicates that Aave's total value locked has fallen by 55% to a meager $8 billion from $33,051 billion. TVL in overall DeFi protocol has fallen by 55% since the end of April, driven in part by capital flight and a decrease in the value of digital assets. Currently, there is $115.7 billion worth of funds remaining compared to $303.9 billion in peak TVL witnessed in November 2021. Most of the balance funds, or $72 billion of TVL, located on the Ethereum blockchain. Goldman Sachs has added a derivatives product connected to Ether to its client-facing crypto offering ETH. The bank completed its first Ethereum non-deliverable forwards trade, a derivative that pays out in cash based on the price of Ether. This provides exposure to institutional investors without requiring them to retain the tokens. The prospect of an ETH-linked derivative product was first suggested by the firm in June 2021. Goldman made the first non-deliverable forward crypto trade on Ether over the counter with London-based Marex as the counterparty. The trade was organized by Marex Solutions, Marex Hedging and Investment Solution Division. That's all for today's news. For daily news and updates of crypto world, don't forget to watch English News Bulletin twice a day only on Crypto TV. I am your news host Parvati Nirman, signing off for now. See you tomorrow, same time, and have a wonderful day.